Lots of questions came in this week. Futures moves this morning. We've got canola currently down $4.90 a ton here. We've got soybeans gaining. It looks like about 2.5 cents here at 11.13. That market's been on fire lately. Bean oil giving up a little bit of ground as well, trading at 56.44 on the March contract. Spring wheat is flat this morning at 5.69. Kansas City's up 3 cents, and corn's up a penny and a half. Canadian dollar, I just wrote down 74 cents. I didn't note if that was up or down, but quiet markets for today because it's USDA day. There is a USDA report coming out here in the next couple of hours. And of course, trade tends to be a little quiet around that. Now, questions for this week. We saw a whole variety of information here come through, questions come through. We have people asking about, can I market my wheat right now if I need to generate cash? Are producer cars still a thing? Can you load a producer car and ship that thing to the coast? Canola crush margins. We have questions about next year's barley outlook. We also have feed wheats. We've got an interesting question around some Nexera here. And if we have time, we did have a question come in about grain marketing advisors and subscriptions. How do farms pick those? So we'll see if we can get to that one. Let's see if we can bring Mr. Como in. Brian, how's your morning going?
Going great. Yeah, it's sun shining. I love USDA days. It gives me something to do for the rest of the day after it's released. So
a lot of information to run through. Hey, Brian?
Exactly.
Good stuff. Now, I wanted to just mention some of the headlines here for this week. Of course, the USDA report, WASDE report, later today. I'm going to get Brian's insights on that in just a second. Second thing I wrote down here was the India-U.S. trade deal, which that started to take form last week, and it has led to bean oil rallying to a pretty impressive number. Some folks said 6-month high. I thought it was a little bit better than that, but we can dive through that as well. Brian, am I missing anything on the headlines this morning? Anything catching your eye?
Other than the USDA, not really. We can talk a little bit about, price spreads on the soybean oil if you want, in relation to the India story. Yeah, but that's about it until the USDA comes out. One thing that I've been watching over the last couple of weeks is just how much canola is being pushed into the crush plants. That might be something we want to talk about. But
okay.
Other than that, that's about it until after 11 CST.
Well, let's just talk through WASDE first here, and then I'm just going to write down that comment about crush plants and canola, because we do have a crush margin question that came in, so that will tie in nicely. Now, I looked at the WASDE numbers and expectations for today. Nothing jumped out to me that was scary, but anything that you're looking for in today's report?
Yeah, I mean, most analysts are talking that February is the lowest volatility USDA report, generally speaking. And it's hard to argue that. But, when everybody's kind of on the same side of the canoe, you know what happens to the canoe at that point. Not that I'm saying that that's how everybody's positioning, but, there's very low expectations for changes. And so as far as the USDA report, I think a surprise, if there were surprises to come down the pipe, I think it would be, on the corn side, it might be the exports might get changed from the U.S. That would be something that I think analysts are looking for. Maybe not in this report, but maybe in the long term. I think wheat and soybeans in the U.S. ending stocks are expected to fall, I think, on the back of exports as well. Mm-hmm. So if the USDA was going to change the U.S. balance sheet, which is probably a low probability at this point, that's those areas that I would look for. The other thing I would look for is changes to South America. Particularly the soybeans. The USDA did raise in January the Brazilian production, 3 million tons from 175 to 178. So they may take a pause because South America is currently in harvest and they don't like to necessarily make changes, while the harvest is ongoing. But those are the areas that I'd be watching.
Yeah, I think the South American one can be a little bit of that wild card because you're in harvest right now. You're maybe not expecting a change in, maybe they surprise us and throw a little more soybean production in Brazil. We'll see. It looked to me like, from a ending stock situation in both the U.S. and the world, stocks are expected to maybe ending stocks to just decline ever so slightly for the most part. Like, is that a month over month? Is that an accurate comment, or was there one there that stood out opposite of that?
I think that's accurate, and you're probably right. It's probably going to be small adjustments, and I think most of the expectations, I had them yesterday, don't have them up on the screen right now, but I think most of the expectations are calling for small reductions in global ending stocks. Yeah.
Awesome. I wanted to get through to some of these questions. Fairly long list. We're not going to get through them all. I got a question from Claire about canola crush margins. So Claire says, canola crush margins are strong. Should farmers be waiting to sell canola due to these margins? So Claire's point on the email was, I don't think the basis is reflecting the positive crush margin, the great crush margin that's available. So should I be waiting to sell? And so I want to tie that in with your comment about canola being pushed to the crushers here as well.
I think, crush margins are really great, which always does benefit the farmers as far as the demand then into the crush plant is high. All season, or at least since the new crop, since we got out of August, the crushers have been on average running at 90%, capacity utilization, which means they're crushing really, really well. We don't often see utilization move above 92%, sometimes 94%. 90 is a very good number, which means that we are crushing as much canola as we possibly can. And that's a reflection of those crush margins, I think. So, if it wasn't for that, we probably would see significantly lower prices. I think that, $200 board crush margins are kind of becoming the new normal. So unless they rallied significantly above that, I don't think that we would. In fact, that may even affect new crop more, because I think more hedging on the crush margins is probably going to be moved to the new crop relatively soon here at some point.
Okay.
I did note that, processor supplies. So every week the CGC tracks what the supply is in process elevators, as well as export or process facilities, meaning crush plants and elevators. And right now the commercial processor stocks are very high. They might even be record high at about 244,000 tons. So the average is like 188. And I think last year we were at 134. So the crush plants are flush with product right now. From what I can see on the cash market, most of those crush plants are trying to incentivize sales into the, June period or somewhere around that period. Yeah. So that's telling me, those kind of things are telling me that we probably aren't going to see super aggressive bids from the crusher at this point. Seasonally, of course, basis does tend to improve as this time period goes on. But this year, with there being so much product left in the bin, that might be more muted this year. Yep. So I think if you're looking to, and I always ask, like, if somebody says, should I wait, to sell canola? It depends on how much you have sold too, right? It's a significant difference between having 80% of your crop sold and having 40% of your crop sold. So I think if there's any real opportunity, it's going to be in the futures market if that can muster some more strength.
Yeah. So I in the short term, the crush plants are doing what they have to do. They are, for many, still a leading delivery point. They're well supplied. And so to sit back here, it's early February. You may have to wait a while to get that spring maybe premium or that absolute best basis. But with all the supply, it may not be as exciting as past years. One comment I want to make here, Brian. So $200 crush margin, let's say, did that incentivize the expansion we've seen in Western Canada over the last couple of years? Like, is that, that consistency, is that why Regina's got a new facility? Is that why Yorkton has expanded and added capacity in that area?
100%. And I mean, these processors can't necessarily bank on crush margins like this. I think the expansions were largely on the back of, the renewable fuel standards here in Canada and the opportunity for 45Z in the US. So I think there definitely is a demand shift going from food grade canola oil and export crude oil to, more inter North American trade for biofuels. I think that's a very important piece of the puzzle.
We had a question come in about, can I market my wheat to generate cash right now, from Robert? So meaning, can I sell now or should I be waiting for something better in this wheat market?
Currently, the prices have come down off the highs. The area that you and I kind of work in, being the Alberta kind of Yellowhead corridor probably is, we've seen bids, kind of scale up to $8 every once in a while. And then those targets get hit and it kind of comes back down. The Canadian dollar's been hurting wheat bids, right now as well. So we could see pops into that, high $7 area or even an 8 handle every once in a while, but that gets sold by a farmer. So that's probably the opportunity right now. But with big yields, like if it's profitable to sell and you need to generate cash flow, I don't see a problem with it. And, especially if you have the ability to, utilize different risk management strategies to keep yourself in the market, if that's what it's going to be. But if you have to sell for cash flow, unfortunately, you're kind of a basis taker at that point, and you just kind of have to bank on the futures if that's how it's going to be.
Pardon me, but the thing with wheat is we've exported, like our pace has been phenomenal, but there's a pile of wheat out there yet too. So it's just get in line to fill those cars, grab that little premium or opportunity when it arrives, and keep going and replace it on paper at some point. You're Brian, you're the kind of the expert here on spreads. And Greg from Southern Alberta writes in and says, what are the opportunities in a tight spread market? How much volume can it take? And he's referring to feed wheat. Now, in this scenario, I believe we're looking at the spread between a CPS and a utility wheat and a hard red spring wheat being a little bit more narrow than normal. Is that what you're seeing, Brian? And is that a signal that growers should look at for the 2026 growing season?
Yeah, I definitely seeing the same thing. I think it is a signal that there is ample supply of high quality wheat out there right now. I think the opportunity in that is, with higher feed prices, the opportunity I think is to sell your lower quality wheat and get rid of it. And because you're kind of hedging yourself in case the spread, widens out a little bit. It probably, won't in the short. You're right. In the short term, our exports are good. So there's possible opportunity that will continue. New crop is always kind of a big wild guess because we don't know what the quality is going to look like. And that's, weather, into harvest, things like that in Canada, that tends to be what widens out that spread if, there's not enough high quality to satisfy. Sometimes there's a little bit, that we can get from the US crop, like how big or small the HRW crop is there. But I think by and large, it's, our spreads here in Canada on the cash market are determined by weather next harvest or the quality that comes off next harvest.
Okay. So it's kind of tough to predict that one or crystal ball that one for next year. Safe?
Yeah. I mean, spreads are low, so I don't think they're going to get a whole lot worse.
Yeah.
So
okay.
sell your low quality. Yeah.
All right. I want to throw one last one for you here. So do you want to talk about what you think the barley market looks like next year, or how do farms pick a grain marketing advisor or analyst?
Sure.
Which one do you want to do?
I can do both real quick.
Okay.
Barley markets are seeing really good exports, but the carryout is high, but not necessarily as high as some of the other product or the other grains like canola and wheat. I think it still looks profitable. So I think that we'll see good acres next year, but I think the downside in prices is likely limited. So there is some upside if you can get the yield. That would be my assessment.
All right.
My quick and dirty one.
And how about Curtis is asking, how do farms pick their grain marketing advisors or analysts?
Yeah, I mean, I could be biased and say, you should get ICL's information, but I think what it really boils down to is trust, right? Trust is everything in this business. So if you don't trust your grain marketing advisor, then I wouldn't necessarily advocate for using them. I also wouldn't trust anybody that says that they pick the market right every time, because nobody does that. But the last point I'll make, I think, is if your grain marketing advisor tailors your or their, recommendations to you based on your individual situation. So, if you have cash flow needs in fall and you need to manage that, that's one thing. If you're, cash flush and you have the time to market and you can wait, I think that's another opportunity. And then there's just the risk tolerance, right? Some people are adverse to risk and some people like to throw chips on the table. So there's a bunch of different ways. And I would just, say, pick the advisor that's going to tailor the program to your needs.
Yeah, I like those comments as well. And I wrote in here, from learning from other farmers who they're using, who's been successful for them, that farmer referral. It's not perfect, but it's a starting point. So
exactly.
All right, Brian, good stuff today, man. Appreciate you being on the show, guys. I just have a couple rapid insights for you now as we wrap up. I want folks to stay close to the soybean oil market here. Take a look at that chart if you're bored today. Have a quick peek at it because it's having a positive influence on canola. And it is at what I would consider a crucial spot in the chart. So take a look at it. Keep close on that one. Second thing today, I know there's a lot of noise out there, folks. Fertilizer noise, farmland noise, lots of stuff going on. I just want you to remember to circle back, focus on your farm, your cash flow, and execute your plan. All right. It's busy out there. It's noisy out there, but don't forget to come back home and execute your plan. Price discovery. Third one, leveraging the information you have. This week we saw, one company bidding higher for wheat. We took that information, talked to a couple other line companies, and ended up getting a much higher price, a 35-cent bump. And the last one I just wanted to highlight, I've been picking on oats, and we did get a $4 bid in Manitoba for new crop oats and a $4.45 in Northeast Saskatchewan. Apparently, I need to confirm that one, but where I heard it is a reliable source. I just need to put my eyes on it now. All right, folks, the buzzer's gone off. This week's cup of coffee was brought to you by DG Mobile Seed Cleaning. Contact Dion at 306-321-5411 for your seed cleaning needs. Again, shouting out Dormy, Saskatchewan, local-based company, a couple of young fellas just giving her out there. So good job, boys. Brian, I'm out of coffee, buddy. Thank you for joining the show. That's it for this week, folks. And I'll see you on Friday's episode of What the Futures. Again, folks, have a great rest of the week.